Hey everyone, it's your Real Estate Geek here. Today we're going to be chatting about jumbo loans, specifically how to get an easier approval and get around those crazy guidelines. To tell us more about that is going to be the lender genius, Bill Marin with New American Funding. If you haven't done so already, please go ahead and give us those thumbs up and subscribe now. By the way, your comments are extremely important to us. Please go ahead and tell us what you think in the comment section below. And no, this isn't the 80-10-10 diet. You may hear it a few times in this video, but it's not that diet. See you on the flip side. Bill, thanks for coming by the office today and sharing more with us about a jumbo loan and how to get around those pesky guidelines and requirements and get that easy approval. So, just so you know, he's going to say some stuff about like 80-10-10. No, we're not talking about the diet, but he needs one, right?
Yes, sir. Yeah, you know, with the baby on the way, I need a diet. Mama's packed on some baby weight, but Dad has too, so you know how that goes.
Yeah,
but as always, Andrew, thank you for having me on the show today. And guys, my name is Bill with New American Funding. Today we're going to talk about kind of some pitfalls and things that you might run into if you're looking at jumbo financing.
Okay, well, to give us an example, because I know that before we came on camera today, Bill, you were sharing an experience with somebody that you'd recently helped with one of these jumbo loans, right?
Yeah.
Go ahead and tell us a little bit about that experience.
So one of the biggest things that people run into with jumbo financing, guys, is debt to income ratios. There's a certain ceiling that you can go up to in a lot of these different programs. In this specific example, this gentleman, he had 7 figures in the bank. He had the money. He had the credit. He was older, more seasoned. He was retired, so he has limited income. So his debt to income ratio was a little high.
Okay.
And what ended up happening was a couple of local banks and actually a credit union as well that he went to declined him for the loan. So he came to us after he was about 2 weeks into the transaction, and we were able to help him avoid all those issues with the debt to income ratio restrictions.
Wow, well that sounds like it worked out great for that gentleman. Yeah. So they're watching right now, they're curious about this jumbo loan. Yeah. Give us like 3 key benefits and tell us what a jumbo loan, starting with what a jumbo loan is.
Yeah, so guys, I mean basically what the heck is a jumbo loan, right? So a jumbo loan is any loan that's over $424,100. So $424,001. That is a $101, that is a jumbo loan. So when you get into that market and you start looking at those loan programs, there's really some benefits to avoiding going that route. And we can do that by getting you into this program and doing what's called an 80-10-10, if you will. You're basically putting at least 10.1% down, up to 9.99% can be a second, which is a HELOC, and then that first mortgage can be $424,100.
Okay, boosh.
Yeah.
Now I'm going to have to pause you because you said a word here, and I want to make sure that our audience and everybody knows what it is.
Yeah.
You said HELOC.
Yeah.
HELOC is a home equity line of credit, right?
Yes, sir.
Tell us briefly what a HELOC is.
So a home equity line of credit, or HELOC, is a second mortgage with a really, really good interest rate. Prime plus 1.5, prime plus 2, which sometimes equals out to about 6%. And it's interest only, which makes for just a really, really low payment, and that's the key benefit and really takeaway from this. Yeah.
Okay, so I know that we asked him to say briefly, and he kind of went into it like a Merriam-Webster's dictionary.
Pretty much, yeah.
Hey, that's good though. All that great information is wonderful to have. So go ahead and resume now with those key benefits we were talking about.
Yeah, so guys, three key benefits. The first one just being it's easier to qualify because we can stick you with just really qualifying for a conventional financing loan. You have a little bit more flexibility through debt to income ratios, less restrictive type guidelines. So that's number one. Number two is obviously the lower down payments. So you've got the interest only home equity line of credit, or the second, that 9.99 up 2% loan, which can be up to $350,000. So if you're comparing that to a jumbo loan, this loan being interest only can really help you save on the monthly payment.
And that's for the HELOC portion, which is the home equity line of credit, right?
Yep.
And for the conforming part, because you were talking about up to $424,100,
yes.
Is that the 10.1% down payment, or is this somehow like all together?
So it's actually all together.
Oh, okay.
Yeah, so the $424,100, then you would add in whatever that second is, and you have to put at least 10.1% down. So whatever that sales price is, you would just do a calculation, and that's what you're looking at.
Okay, cool.
Yeah, but that guys, that third benefit is, and this is one of the coolest things that you're going to avoid, is just faster closing times. And I know we all love that. Andrew loves that. We close faster.
I love it because the families love it.
Yeah. So we can get you into your house faster, and that's the big thing is because a lot of times people will come to us when they've been declined by another lender. Unfortunately, we have to perform quickly.
Right.
And that previous example that I gave you came to us a couple weeks after they were already in contract. We came in, kind of saved the day. We were able to get him approved and get him closed a couple days before his original close of escrow.
Wow.
Yeah.
Well, great job, Bill, on being able to do that.
Thanks.
So I'm kind of curious at this point before, I know that you had like 4 main guidelines. There's several guidelines, but I know that Bill told me that he had 4 that he wanted to share with you today. Before we get there, I'm dying to know. So if we got this 80-10-10 diet, right, Bill? And we got this jumbo loan program over here called an 80-10-10. I understand why the diet's called 80-10-10. Why in the world is this jumbo loan called 80-10-10? In you guys' lender world
so
vocabulary.
in the lender vocabulary, right? So it's called combined loan to value, guys. So the first mortgage, that number we're throwing around, that maximum conforming loan limit of $424,100. Okay?
Right.
That is going to be your 80%. Right. So that's going to be your 80%.
Now it's starting to make sense.
So then your minimum down payment being 10.1%.
Right.
And then the remainder is going to be the home equity line of credit, which equals your 100% financing.
So it's 80% is the conforming amount of $424,100. $424,100.
Yep.
And then you're talking about a 10.1% down payment.
Correct.
And then 10% is your home equity line of credit or HELOC, right?
Correct. Yep. And you can put more down if you want to, but most of the time people just end up doing the
Well, why didn't you just start off that way, Bill? It's a lot easier to understand that way. Okay, so what are those 4 guidelines you want to share with them today?
So obviously what a lot of people are wondering too, and this comes in, again, to the whole jumbo world of difficulty financing. We're going to follow the basic guidelines of conventional financing with the little things that are a little bit stricter when it comes to qualifying for the HELOC. But you're looking at a minimum FICO score of, guys, 700, which is a little bit higher than what you want to qualify for with a regular conventional loan, but it should be well under what most jumbo loans require.
Sure.
So a 700 up to a combined loan to value. Remember all those numbers combined, the 424 plus a second plus your down payment. Combined loan to value of 750,000 or less. You're looking at 700 mid FICO score.
Okay. Yeah. Great.
Yep. And then kind of to throw that in, if you're looking at a home that's a little bit more expensive, and your combined loan to value is above $750,000 up to 1.5 million, you have to have a 730 score or higher.
Okay.
Yep. So the second guideline I want to talk about is your credit seasoning requirements, and this is the thing that's a little bit more strict than your traditional conventional financing, but it requires an 8-year wait period after any type of bankruptcy. So once you got that discharge, guys, this program does require an 8-year wait period.
Even for the Chapter 13, if the judge approved it, because I know that with like a VA, FHA conventional loan, Chapter 13 bankruptcy, after 12 months of payments, the judge approves it, they can actually...
So that is correct for traditional conventional financing.
But jumbo, in this case, 80-10-10 is out.
Yes, sir. Yep. So to qualify for that second mortgage, which is coming in here and helping us out to get the jumbo loan,
you have to line of credit.
Correct.
Perfect.
Yeah, you have to have the 8-year wait period for the bankruptcy or foreclosure.
Okay.
Yeah.
Good to know.
Yeah. Awesome stuff. So the next thing is regarding short sales and foreclosures, guys. So there is a 5-year wait period for short sales and foreclosures to be able to qualify for this program. So same thing kind of goes in line with the bankruptcies. It's a little bit more strict than conventional financing, but it can be much less stringent than your typical jumbo guidelines.
Well, it makes a lot of sense. So it's less stringent than the typical jumbo guidelines, but it only makes sense, right? That it's going to be more stringent than the typical conforming loan amount because we're dealing with amounts of money up to what, 1.5 million, you said?
Yep.
So I mean, if a bank is going to lend that kind of dough, you need to show that you're good to go.
Yeah, exactly. And guys, that's one thing to remember too, is this program is meant to fit within that specific box. So really, most of these programs that we close are people that are buying properties from $450,000 all the way up to like just about $1 million. So you can go a little bit higher if you want, but that's really where this program fits within that box, and it really can come through and help.
Great. And did we cover our third or fourth?
That was the third.
Okay, cool. So, lost track. I was getting so involved with what you're saying. So give us the fourth one.
So the fourth thing, guys, is your debt to income ratio. And this is probably the biggest takeaway from this program. It follows a typical conventional guideline. So we can go all the way up to 45%.
Wow. So 45% debt to income ratio.
Yes.
Great.
Yeah. So that's huge. And you can actually pay off additional, you know, if you have credit cards or cars, things like that, you can pay those off to qualify, which is cool.
Great. Well, you know, Bill, I really appreciate you coming by and giving us this great information. If they want to contact you right now and learn more about this program, what should they do?
So guys, the first thing is to complete an application, and you can just go to that website right there, complete the application. It takes about 10-15 minutes, or pick up the phone, give us a call. The number's right there. Application takes about 10-15 minutes over the phone.
Great. Again, appreciate you coming by. If you've enjoyed this Real Estate Geekness with some lender genius, go ahead and like and share now. Leave your feedback in the comment section below. Tell us what you thought, and if you have a great idea for another video, let us know below. Thank you and enjoy an amazing day.
Thank you.